You know something huge is happening when one company's performance sends shockwaves across the entire tech industry. And today we're diving deep into the absolute powerhouse that is TSMC, the world's undisputed king of semiconductors, to see what their latest numbers tell us about the future of AI.
Just take a second to look at that number. 505 billion new Taiwan dollars. That, right there, is the record-breaking net income TSMC pulled in for its fourth quarter. And it didn't just meet expectations, it completely shattered them.
And if that wasn't impressive enough, that record income came with an absolutely staggering 35% jump in profit year over year. I mean, that's not just growth, that is a statement.
So let's actually break down this headline performance, because these numbers, they really paint a crystal clear picture of a company that is just at the absolute peak of its game.
And you've got to understand, this wasn't some one-off success story. This result marks their 8th straight quarter of growth. It's a huge signal that the chip industry isn't just bouncing back, it's rocketing into a whole new era.
But here's the thing, a win this big doesn't just happen in a bubble. TSMC's success really was like a rising tide for the entire sector, basically confirming that the confidence in this whole AI build-out is stronger than it has ever been.
And you could literally see that confidence ripple through the market almost instantly. The news sent shares of major partners like Nvidia, AMD, and Broadcom soaring, which just goes to show you how tightly connected this whole ecosystem really is.
And this excitement wasn't just for a few of the big players. The broader VanEck Semiconductor ETF, which is a really key benchmark for the industry, it rallied 2% right after the report dropped. Investors are clearly all in on the future of AI hardware.
So, what's the engine behind all of this? Well, in one word, AI. The demand for high-performance computing, we're talking about the chips that power artificial intelligence, it has just exploded. It's now making up a whopping 55% of TSMC's total sales.
And this is where it gets really interesting. The industry isn't just buying more chips, they are buying the future. A massive 77% of TSMC's revenue now comes from their most advanced nodes, that's 7-nanometer tech or smaller. Now to put that in perspective, the smaller the nanometer, the more power you can cram onto a single chip. We are talking about the absolute bleeding edge of technology here.
So, what does a company like TSMC do with all this incredible momentum? Well, they're not sitting back. They are taking all of it and doubling down, investing like crazy to meet the demand that's right around the corner.
For 2026, get this, they've laid out this super aggressive plan to spend somewhere between 52 and 56 billion US dollars just to expand their manufacturing capacity.
And a huge piece of this expansion revolves around this concept they're calling Gigafab clusters. These are massive, interconnected manufacturing hubs, and they're putting a major focus on their new facilities right here in Arizona.
Now, we're not just talking about bigger factories here. No way. These are strategic hubs that are engineered for incredible scale and streamlined productivity. But maybe most importantly, they're being built to secure the supply chains for their massive client base in the US.
Okay, but it's not all smooth sailing, right? The company is actually being really clear-eyed about the future. The road ahead isn't totally clear of obstacles, so it's important we look at the potential headwinds they're navigating.
So you have to ask yourself, what could possibly slow this incredible train down? Well, the company has been refreshingly honest about the potential risks.
Their CEO, C.C. Wei, has actually flagged a few specific challenges. Things like shifting global tariff policies, a memory shortage that's still hanging around, and the very real risk that all of this could drive up costs for you and me on everything from our smartphones to our PCs. And this right here highlights a really fascinating strategic trade-off they're making. You see, expanding globally is absolutely essential to serve their clients, but the company admits that these brand new overseas plants might not have the same super high profit margins as their incredibly efficient operations back home. It's a real dilemma.
So you take the good, you take the potential headwinds. What's the bottom line? Well, the outlook is still incredibly bullish, with pretty much every sign pointing to 2026 as a breakout year for the entire industry.
First and foremost, the next generation of technology, it's not on the way, it's here. Mass production of their cutting-edge 2-nanometer chips is already happening. That's a leap in tech that's going to pave the way for even more powerful AI.
And because of that amazing tech, analysts are all pointing to 2026 as the official breakout year for AI server demand. The hardware backbone for this whole revolution is being built, literally, as we speak.
Ultimately, what this all boils down to is that TSMC has cemented its place as the indispensable backbone of, and this is no exaggeration, the entire modern economy. Their manufacturing process is so complex, it's so expensive, it takes decades of knowledge, it is nearly impossible for anyone else to replicate. They've built a competitive moat that makes them essential.
So for anyone in the tech world, for any investor, the message coming from TSMC is as loud and clear as it gets. If you think the last few years were wild, you'd better hold on tight, because the AI revolution, it is just getting started.